All three funds, as backdrop, are different than a charitable response fund. Even though they're structured that way with grants and recoverable grants, they invest using grants and expenditure responsibility, forgivable loans across the whole spectrum of instruments that Impact Assets works with every day. We structure deals across the spectrum, and even some crazy ones that aren't here. It's our bread and butter. It's what we do well, and it really is what's needed in this crisis. We need the ability to be fast and agile and to work across this whole spectrum of ways to deploy capital. As we talked to our clients about what felt right about this response, we ruminated on whether we should have a market rate response to this that is an impact investing fund. And unanimously, our clients felt that that is not what is called for in this crisis. And that a loan that has an interest rate that compensates you for the risk that we're seeing in this economic downturn is going to be too high and feel too egregious. So the majority of what we're doing is going to be focused on the left-hand side of the page. However, speed was a key design principle. And if a company has a convertible note or an equity fundraise or even a market rate loan open, we've seen some promissory notes at 10 and 15%. If they have an open vehicle, that's the fastest way to get capital to that company, and that's the structure we'll do. So we will operate across this whole spectrum. So as I mentioned, speed and impact are our two big design principles. The funds are operating across that whole spectrum, but what is different about these funds from a typical impact investing fund is that we don't have a promise on return of capital or return on capital. And so we're not trying to manage towards return expectations. We're trying to manage to, like a charitable fund, money in, money out. We're trying to get money where it's needed as fast as possible because speed actually is a determining factor in who survives.